Good morning. Welcome to the CUNA Advocacy Update. I'm Ryan Donovan, CUNA's Chief Advocacy Officer. It's July 13th, 2020. Here are three things you need to know about credit union advocacy this week. Congress is out of session this week, but hearings are going to continue in the House of Representatives. PPP Forgiveness Legislation has been introduced in the Senate, and CUNA has submitted comment letters on several regulatory matters in recent weeks. Congress is out of session this week, but hearings are going to continue in the House of Representatives, and we're going to be following a number of these hearings. On Tuesday, the House Committee on Financial Services, Subcommittee on Investor Protection and Capital Markets will hold a hearing on promoting economic recovery, examining capital markets and worker protections in the COVID-19 era. On Wednesday, the House Committee on Small Business is going to hold a hearing entitled Long-Lasting Solutions for a Small Business Recovery. On Thursday, the House Committee on Financial Services Subcommittee on Oversight and Investigation is going to hold a hearing on oversight of the mortgage servicers' implementation of the CARES Act. And on Friday, the Committee on Small Business is going to hold a hearing on oversight of the Small Business Administration and the Department of Treasury pandemic programs. And the House Committee on Financial Services, Subcommittee on National Security, International Development, and Monetary Policy is going to hold a hearing on the Paycheck Security, Economic Perspectives on Alternative Approaches to Protecting Workers' Pay during COVID-19. Beyond these hearings, there's a lot of activity taking place behind the scenes on the next phase of recovery legislation. We expect Congress will focus on the next round when it returns from this recess, and this period between now and August recess is going to be critical for new recovery legislation. One thing that may be included in the next recovery bill, or it could move on its own, is a bill that would make it easier for small businesses to get their paycheck protection loans forgiven. Legislation introduced in the Senate by Senators Kramer, Menendez, Tillis, and Sinema would provide forgiveness for Paycheck Protection Program loans of less than $150,000 if the borrower submits an attestation form to the lender, a one-page form. It also ensures that the lender will be held harmless for any enforcement action if the borrower's attestation contains falsehoods. According to the Small Business Administration, 3.7 million PPP loans were $150,000 or less. This accounted for approximately 85% of all loans, but only 26% of the program dollars. This bill will allow America's small business owners and Main Street financial institutions to remain focused on serving their communities rather than jumping through burdensome regulatory hurdles. We strongly support this legislation. Over the last 2 weeks, CUNA submitted a number of comment letters to various regulatory agencies. We supported NCUA's proposal on subordinated debt, which would allow low-income credit unions, complex credit unions, and new credit unions to issue subordinated debt instruments. The letter focuses on NCUA's legal authority to issue this rule, and we also provided suggestions on how the proposal could be improved, including in the area of required disclosure documents. We also supported NCUA's proposed rule on joint ownership for share accounts. The proposal addresses the requirement for separate joint account insurance that each co-owner of a joint account has personally signed a membership card or an account signature card. We also responded to requests for comment on temporary changes to the central liquidity facility and temporary changes to PCA regulations that would provide NCUA and credit unions with additional flexibility during the COVID-19 crisis. We wrote to the Federal Reserve to strongly support its decision to remove the limit on account transfers under Regulation D, stating that the Federal Reserve should articulate this as a permanent change. We've been pushing for this elimination for several years, 7 or 8 years to be exact, and the Fed announced an interim final rule in April removing this limit. Now, in order for them to change back, they'd have to go through another rulemaking, but what we'd like to see is for the Fed to say, they don't intend to do that. We also sent a letter to congratulate Richard Jones on his new position as chairman of the Financial Accounting Standards Board, FASB. The letter highlights the credit union difference. One of the reasons not all GAAP accounting standards are appropriate for credit unions. We also use this opportunity to ensure that the new chairman is aware of our opposition to CECL for credit unions. As we look ahead, here are a few things to keep in mind. Congress is going to be back next week, and we'll start what might be best referred to as a relay race to the end of the term. There are going to be a handful of natural transitions between now and January. Yes, January. August recess, the end of the fiscal year on September 30th, the election, and then the lame duck session. Congress works best on crisis and deadline. We have enough crisis for them to work with. And as we look ahead, we have a number of deadlines. So look for a fury of activity before each of these milestones, and it should help Congress to get some things across the line. Credit unions should pay attention to the upcoming confirmation hearing for Kyle Hoffman to be an NCUA board member. He'll appear alongside several other nominees at a confirmation hearing on July 21st. Interestingly, if confirmed, he'd be the second Hill staffer serving on the NCUA board, the other being board member Todd Harper. The Banking Committee has been very efficient in moving nominees over the last few years. This nomination will likely be paired with a Democratic nomination for another agency, perhaps making it easier to get through the full Senate later this summer. Finally, the Supreme Court session has ended, but work continues to establish a docket for the next term. While the court recently announced that it would not consider the American Bankers Association case against NCUA's field of membership rule, as the court ended its term, it has announced that it would consider a case brought by Facebook related to the definition of an auto dialer under the Telephone Consumer Protection Act, as well as a case that challenges the single director structure at the Federal Housing Finance Administration. We'll be looking closely at how we might engage in each of those cases in the coming months. That's it for this week. Thanks for taking some time to join me for the advocacy update. I hope you found this helpful. Please don't hesitate to reach out to me if you have any questions or concerns, and I hope you have a great week. Thanks.